What's going on, guys? All right, so what we have today is Jerome Powell. He is, I believe he's going to speak here, so it's going to start at 8:30. All right, but first let me just see the context behind his actual meeting first, because that's what's really going to be more important. Just one sec while I find it. Calendar. What's today? The 9th. The crazy part is that this is pre-recorded too. Morning. What's up, Wayne? Yeah, it's a pre-recorded. Welcome remarks to the committee bank conference hosted by the Federal Reserve Board. Yeah, so Bowman is going to speak at... Yeah, Bowman's going to be there as well. Probably nothing... Let's see. Like Barr is speaking on the economic outlook. So something like this is what's important. Kashkari also is going to be there. So they all going to be there at this conference. But it depends if they speak on like current events. That'll be what is really important. But this is pre-recorded. So it's hard to determine how the markets will react to it, because even though it's pre-recorded, right, it's a higher probability that hopefully, there's no inside trading going on, right? That hopefully they don't know what was said already, right? We don't see some like crazy ass reactions before they even speak. But let's see how this goes. All right, we just watch it together. Let's see if we could get anything important from that. Worst case scenario is just that we're gonna have to wait for this meeting to end, right? Just to see if the markets could actually focus on something else, right? Like what happened last night with Trump talking about the end of the Israel war with Hamas, right? That could most likely move the markets. Hopefully, we could get those type of, hopefully that could actually be the focus of the markets, right? But if it doesn't, hey, we just have to be a little more cautious, right? That's just pretty much it. The phase 1 Gaza peace deal, does it apple? We'll see today, Bevan. We'll see today how the markets react today. Like if that actually would cause an impact. The background music is just like right now is just from that meeting. It's going to start around 8:30. And we don't know how long it's going to last, but it's no coincidence we're seeing dollar range bound. We're seeing gold pretty much stuck in a range. We can see equities is ranging, so it's definitely showing interest for this actual meeting right now today. That's why we're seeing stagnant markets. Okay. S&P is kind of in the same type of price action as NASDAQ for you guys that like to look at S&P. But NASDAQ, S&P, we can see that US 30 very choppy range, right? So the best bet is just to hopefully this meeting passes, right? And then we could look for opportunities afterwards. Either the opportunities is going to be from the ending of the war, will that move the markets or not, right? So it's just going to really depend on what is being said in this next hour for us to really look for some type of edge. So when it comes down to the, like these type of meetings, right? We're looking for comments on obviously growth, labor, and inflation, right? And what is the future possibility of interest rates? So we're going to be paying attention to those type of comments if there is any, right? Because that's what the markets actually move by. If he comments on, if he says that anything about this shutdown, right, that will probably be market moving. If he shows any concerns or uncertainty, right, that's going to move the markets. So those are going to be the typical things we're going to pay attention to. All right, guys. What pairs you going to be looking at, guys? What pairs y'all going to be looking at? I'm just marking off the support resistant areas. And then we're just going to, hopefully we could get a risk on or risk off market today. Like hopefully we could just, we get a hawkish or dovish reaction in the markets today. That's what I'm really hoping for. It's just something like along those lines. Make life a lot easier for us today.
Hi, I'm Ian, and I work for the Federal Reserve, the central bank
Morning,
of the United
States.
Guys.
NAS until gold pulls back. Yeah.
Main entities
GU,
that
EU.
All
right, good
that
job.
serve the
Yeah,
public
good
and promote
shit,
the
guys.
health of our economy and the stability of our financial system.
Yeah, because right now we're somewhat seeing a risk-on market. Like, just to give you guys a glimpse, right now we're seeing AD, NZD, CAD is spiking higher. We still see a little pressure in the dollar, the yen, and the Swiss. So we're getting somewhat of a risk-on environment at the moment.
It's an agency of the federal government that reports to and is directly accountable to Congress. The board consists of 7 members or governors who are nominated by the...
Mute this. All right, so you guys can hear. Looking at gold. Cool. Gold, silver, USD. Yeah, everybody is pretty much looking at the same stuff. All right, awesome. All right, so when it comes to, I put some money in a Forex account to trade Euro. Yeah, man, that's good, MJ. A lot of opportunity is going to come from Euro too. All right, so hawkish reaction, right? If they give us comments on the possibility of pausing interest rates, right, moving forward, right? If they give us any concerns on that, saying that the lockdown is giving them concerns that they're going to be more data dependent, they're going to be more patient, right? If there's anything like any type of language leaning more towards that, we're going to see the green arrows follow. So that's going to be stronger dollar, right? We're going to see breaks of structure, stronger dollar. That's going to cause GU to push lower. That's going to cause EU to push lower, USD JPY to go higher, right? So that's going to be a hawkish reaction. That's going to cause equities to spike lower. Anticipation that rates is going to stay higher for the year. If that's how the conversation goes, okay? If we get the opposite, if we see that they're not even concerned about the government shutdown, we see that they're still staying on target with their plan, interest rates in the future is most likely still going to happen. We're going to see weaker dollar. That's going to cause dollar weakness. UJ is going to push lower, breaking that support. We're going to see pairs like GU and EU pushing higher due to a weaker dollar, right? We're going to see gold push higher from a weaker dollar. That would also be dovish reaction, is also good for the stock markets, right? More rate cuts. They're still seeing weak, like lower labor data, weaker growth, everything regarding the same language they've been saying this whole time. We're going to continue to see the same reaction. Okay. So it just depends on how this meeting go. It's a possibility that we might not get anything. You know what I'm saying? It's a possibility that they'll probably ask shitty questions, right? It's a possibility that we don't get nothing. I'm hoping that Jerome Powell just like want to fuck shit up, right? Because this is his last year, you know? So I would hope that he wants violence, right? But he's been so good with his words. I just hope that he just starts not caring, not like caring in a point like that, but just, I just hope that he just starts like giving us an edge, like he's really good with his words. He knows what to say, what not to say. Like he understands. He's been doing this for a long time, but it'd be good if he could like actually give us something. Right. So that's what we're going to focus on. All right, you guys on IG, you probably want a better look. Go to YouTube, go on my YouTube, and you'll be able to see the screen better. Yeah, my bad. How's y'all trading going so far this week, guys? Yeah, it's okay to sit on hands, bro. It's probably no Q&A. It's probably not. Like, it's a pre-recording, so I'm not really expecting much from this, to tell you the truth. I wouldn't be surprised if there's like, I'm not really expecting much from it. Yeah, like just we watch it together. Let's see, just in case, right? But if not, at least set those alerts, like those areas of interest that I have right here for you guys. Just set those alerts. Like, I think that would be the best bet. At least I can see the dollar a little bit. Alright, let's see how y'all guys been doing. Yeah, the music's, it's like elevator music. I hope he comes out and say we're just gonna cut interest rates next meeting. Yeah, I hope so. Like, I hope it's just easy. You done for the week, Alex? Good job. Yeah, like just listen to yourself too. When you tell yourself you made your profits for the week so far, you did your job. Like, just stick to it. You know what I'm saying? Like, still pay attention to the markets just in case if there's other opportunities. But yeah, amazing job. Pretty good. All right, been working on some flaws and it helped. Yeah, man. Yeah, MJ. Like, talk about your flaws in a group too, because it'll help others as well. Because like you're like way advanced. You know what I'm saying? And it would definitely help others. You took the sells when the news came out? Yeah, good job, Eddie. What's up, Daniel? Yeah, like that's why like it's important to listen to the market update, because when we get the headline, like most people like confuse the news, right? Where yeah, Rabbi, gold does need a pullback. When they hear the news, they think that is just the change of direction. That's the direction 100%. Like, oh, like gold is dropping. Oh, news headline, bam. Like, no. Geopolitical tensions, when the headline comes out, the moves are quick and fast. You know what I'm saying? And then it recovers. So that's the bigger picture about it. You know, so that's what like we talk about, you know. So even when I do the voice note, it's like, understand that, okay, we could get a good move, but always anticipate a pullback, because the bigger picture for gold is what? Buys or sells, guys. Right. So if you understand that purpose, right, those sells are set up for better buys afterwards. It's just that you don't want to get caught trying to catch a falling knife in the markets. Right. Because what if gold keeps dropping? But it's good to. Yeah, silver has been a great investment for people, man. Yeah, I remember silver when, like, back in 2020, when that shit was like around 17, I was thinking about buying and holding it. But I felt like I messed up because I listened to somebody, like, right? That's where I messed up. I listened to somebody that told me, like, nah, it's not worth it because it's the lack of silver is not like worth it. It's just no volume in silver, and it's like there's just no growth in silver. It was something like that, where I was just like, you know what, all right, cool. And then looking back, imagine being able to buy silver during 2020 when silver hit that week. Look at the weekly support, that double bottom, right? Imagine buying from like 10 ounces or 15, 17. I remember it was exactly at 17. Then I remember I was looking at it again when it was like around 20. Yeah, like, man. Yeah, MJ is dope, man. He's been killing it. Really amazing job, brother. You got in silver again at 48.50, still holding. Yeah, man. Really. I just think it's gonna take probably your kids would enjoy like probably kids with silver hits over 100, 200. Like it's probably gonna take a while. Like people expect it to move like Bitcoin or something, but it's gonna take a while. Yeah, like exactly, Robbie. I think it is too. It just gonna take a while. I think it's a real good long-term investment. Like just get some ETFs, put it in something separate, and just forget about it. Just hold on and forget about it. All right, we got 3 minutes, guys. Yeah, thanks, Tiara. Hopefully you guys read the daily devotional today. We talked about Lydia in Acts 16:14. All right. This is a woman that had faith in a city that didn't believe, right? It kind of reminds us in a society that we live in today where it feels like in order for you to be successful, you have to do everything opposite of God's word. Right. But right here, this is why I want y'all to read this part in Acts, right? Read about Lydia, that her being obedient and still having faith along people that were succeeding because they moved away from God. This is actual proof that you can be successful too. So this is why I put this as a daily devotional so you could break down everything. All right, guys. So definitely read that. Because I know it's hard to feel it this way because like we look at society and people that are successful, it seems like they do everything that's not Christ-like. So it feels like, oh, I have to be disobedient to my faith. And it's not true, right? They just make it hard to find these type of stories because it's not entertaining. And plus they don't want you to know this shit. They don't want you to know if you can be successful too and be 100% faithful. Right. So you have to seek the right information with intention. Right. Because if you just continue to just look at stuff from hindsight, you're going to be looking at everything negative that's going to destroy you mentally and physically. But with intention, make sure throughout the day you listen to the right words. You listen to the right people. You listen to the right music. You be around proper people that could help build you up. Because if you don't seek that with intention, everything around you is going to destroy you because that's how the world works. Right. So we have to seek better with intention. All right. All right. All right. So 8:30. Let's see if this starts. Be patient. They be on black time. So they say 8:30 might be like 8:50. Yeah, I don't know why people say that. Like, it's not a signal, a gold buy or sell. Like, you could just when you talk like that, like people automatically know what type of trader you are. Like, it's like get off of free YouTube stuff. Like it doesn't help. Like that's the mindset of people that's buying signals and stuff every day.
My name is Amanda Roberts, and I am a member of the Community Bank Supervision Team as well as one of the conference organizers. Before we get started, I have to briefly go over some housekeeping items. So the first thing, probably most importantly, is if you haven't found them already, the bathrooms are down the hall and to the right. Second,
yeah, Leah, I don't think he's commented on monetary policy neither.
Third,
but let's see what he says. You could probably get it from like the first
on the board's YouTube channel.
10 minutes of it of the speech that you can tell if it's market moving or not. If it's not, then just wait for it to end.
As I'm sure you've already discovered,
like we focus on the markets afterwards. It'll be crazy if Trump just comes out of nowhere and just starts speaking his stuff. But most likely the market is going to wait until once it said pre-recording, I knew it was a waste of time. But let's see what he has to say. Then afterwards, we just wait until afterwards. Yeah, there's going to be a Q&A. Yeah, we see what happens. The Q&A, even if he doesn't speak on monetary policy, it's very hard for the people to not ask him questions anyway. That is related to it.
Good morning and welcome to the Federal Reserve Board.
This shit looks so.
I'm sorry that I'm traveling today and could not be with you.
Imagine that's
Thank
AI.
you to Vice Chair for Supervision, Mickey Bowman, for hosting this conference. Thank you
know if
also
you guys
to
can
all
hear
the
it.
board staff that made this event possible. Community banks play a vital role in the U.S. financial system because they have strong links to the people and businesses they serve and direct knowledge of local economic conditions. These close ties allow community bankers to better understand their customers and the ensuing products and services for those they serve. I saw this clearly when I led the board's Community and Regional Bank Subcommittee as a governor. I have also seen the critical role of community banks in the communities where I've lived, including as a community bank customer. Today's event is a helpful opportunity for Fed leaders to hear from community bankers and learn more about the issues you face. We're committed to understanding these issues, and we have long been committed to tailoring our supervisory practices as appropriate for community banks.
They don't give a crap about us
to reduce unnecessary
you could
burden,
already tell.
while still ensuring that community banks continue to operate in a
Yeah,
safe
it's about
and
community
sound
banks.
manner.
So it's
Thank you so much for
yeah,
being
maybe
here
the
today to
Q
share
maybe
your knowledge
the
and
Q&A,
experience.
but it's
And
a
thanks for being such a
possibility.
vital part of
Just
the
wait for
communities
this
that
to
you serve.
finish and then look for opportunities afterwards. But you never know. They might talk about, if they talk about uncertainty with community banks, like something like that, that can be market moving. And I think next week we have bank
Thank you to
earnings.
Chair Powell for opening
So
our
that's
conference this
also going to
morning.
be
It's so
important too, is
wonderful
next
to
week
see all
we
of
got
you
banking
here,
earnings. But
in
like
Washington,
sometimes
again
it's good
with
to
us,
understand the
to
language. I
discuss
know
and
it's boring,
celebrate
guys. I'd
community
rather play
banking and to talk
COD,
about
Call
what
of
the
Duty,
future's going to
but
look like. Morning,
sometimes they
Secretary.
literally give you
So it's a privilege
everything
for us
that
to
you
be
need
here
to
today
hear,
and for me
you
to be
know?
here with you at the Federal Reserve Board with so many of our nation's bank CEOs, community bank CEOs.
Is that
I wanna
Bowman? I
thank-
thought Bowman was a
start
guy.
by thanking our bankers for the
Is
essential
it
work
Michelle
that
Bowman?
you do
Yeah,
every day.
it's crazy to put a face
Serving
in the
your
name.
communities,
Can I
supporting small
ask why
businesses and
he's talking
families,
if the
and
government is
keeping
shut down?
local to
entities.
discuss the
government
future
is
of
like
community banking.
the people we vote for.
This great nation
We don't vote
hosts
for
the largest and
the
most
IMF. We
efficient
don't vote for
financial
central
system
bank
in the
leaders.
world,
We don't vote for the
efficient and
IMS.
effective
We don't vote for
financial system
them.
in the world.
So it's separate
Ensuring
entities.
that
Like
capital
government
flows to
shutdown
those
is
who
like
need it
federal
and can put it to productive
job,
use.
like federal, the White House.
I think of community
you know,
banks
stuff
as the
like that.
foundation
Like the
of our
federal
financial
fundings,
system.
like stuff like that. Yeah.
You are often
so today
the
at 8:30 we
first
didn't get
call for
jobless
small
claims. So that was
businesses
supposed to be
seeking to
today.
grow,
Was
for
today, right,
families
guys?
looking to buy
I think today was
homes,
supposed to be
and
jobless
for
claims.
anyone seeking to financial goals.
Or is it tomorrow? I
At
think
a
it's
time of
today. What's today?
rapid
Thursday, right?
technological
Shit, I'm
change,
all over the place.
a shifting regulatory landscape.
Yeah, I
and
think today.
evolving
Yeah,
consumer
I think it's supposed to be today.
Your work has never
Yeah, so
been
jobless
more
claims didn't
vital
happen
or
today.
more challenging. So the purpose of
So
this
that's
conference is about
that's the
looking
problem
ahead
with the government
at the
shutdown.
opportunities, the risks, and the innovations that will shape the future of community banking. It's also about telling the community bank story, not only the services that you provide and the impact that you have in your communities, but also the value of having strong, profitable, well-managed companies as the foundation of the banking system. There's a story to tell here, and we want to ensure that community banks tell it and that you create your own narrative. This conference today brings together more than 100 community bank CEOs in person and many more. Our panels include CEOs from across our diverse financial system. And I look forward to hearing directly from these leaders to share what they are seeing, emerging trends, economic shifts, and innovations that are shaping the financial system, including the impact of AI and fraud that will likely affect all of your businesses going forward. This conference also brings together a broader perspective, from our Treasury Secretary, Scott Bessent, to new technologies, with Paxos CEO Chad Cascarilla discussing new technologies.
Let me say this, because people lack the importance of these type of meetings, right? Because like I used to work for the city council in New York, right? And imagine living in a state where the politicians tell you everything that is going on, and the people that are living there is like, what the hell is going on? Why is this city the way that it is? And nobody shows up to those meetings. Nobody don't even know the chairperson of their district. Probably where you live right now in America, who's the chairperson of your community? You don't even know it, right? So just from something that little, people don't pay attention to it. They have meetings every single day, like 10, 20 meetings based on your life. They're out there making meetings discussing how you should live your life. while the politicians, like their kids go to these nice schools, they get driven by security to go to work, and they're telling you that you're safe and how you should spend your money and how your life should be lived. And people don't pay attention to these stuff, right? Because obviously, like right now, if it's not for this call, would you be listening to this video, right? So these people control your lives. Like right now, you're going to be seeing people from banks talking. Right? You ain't going to know their name. You ain't going to know anything about them, but they are the ones that's controlling the value of your money. They control everything, your loans. They tell you everything during these meetings, problems, how to fix it, how things should work. So it's like nothing is a guess. These guys like when you listen to these meetings, like I don't think today is not going to matter, but in reality, in general, they have meetings like this every single day, and they tell us exactly what's going to happen. None of this shit is a surprise, but us as humans, we don't pay attention to this stuff. And then when something happens, we're like, holy shit, like what's going on? Like, why is this possible? Why this happened? It's because y'all don't pay attention to this stuff. Y'all don't vote people out. Y'all think this is boring. You know what I'm saying? You'd rather watch Netflix while these people control our lives. Right. This is why it's crazy how they could just tell people to not focus on fundamentals. Don't focus on news, while they control the value of our currency. Like the central bank members are literally telling us every single day what is going on with the economy, why it's happening, what they're going to do with the value of the money, how we should do it, how we should spend it, what's going to happen next. They tell us all of this stuff every single day, and we fail to pay attention to it while they run our lives. Right. And then after they've done, like even this fool right here, you know, I don't think y'all guys can see him, but even this guy, Scott Bennett, right? Most of y'all don't even know who he is, but like these people control, like it's crazy. Like, cause I'm there, I used to work there, and it's like, people don't care. They only care after something happens. And by the time it's already too late, it's already voted in. Right. So it's crazy. Like another story before, right? I was working at the city council. It was before 2020. I think it was like 2019, the final budget meeting. Tell me how before immigration, before anything in New York City, the last meeting, they was passing a budget for immigrants to vote for political leaders. Even if they don't live in America, even if they don't have a visa, they don't have residency, they passed a budget for them to vote. They did this before the immigration thing. How they know that was possible, right? So all of this stuff is planned. I was there like, why does that make sense to allow immigrants to vote for council members if most of them don't speak English? They don't even know anything about you. There's people that have been living in New York for their whole life, don't even know anything about council members. So why they care so much about immigrants that is not from this country to vote for them? They did this in like 2008 and 2019. 2018 to 2019. And then fast forward, look what happened now. Look at why they can continuously have their chairs, right? You have a council member that you never even thought of. How are you winning? How are they saying you're getting all these votes and the community don't even know you, right? So it's just something so for the thought, right? These are the people, you got to pay attention to this stuff.
Community bankers are laying the foundation for America's golden age. One loan, one family, and one small business at a time. Yeah,
it's crazy.
My job as Treasury Secretary is to make it easier for you to do your job. To that end, we have worked hard for the first 8 months of this administration to empower community banks to take back control of their own future. This morning, I will discuss why the Trump administration has sought to empower community banks, how we have done it, and where we will go from here. First, why? Community banks are essential to America's heartland. They provide the capital that binds small towns together. Community banks make the charitable contribution for the new playground. They make the loans for small businesses, farmers, and first-time homebuyers. They employ local leaders and teach financial literacy in our schools. Parallel prosperity, as I mentioned before, is the idea that Main Street and Wall Street can grow together, and community banks play an instrumental role in driving growth on the Main Street side of the ledger. To expand opportunities for all Americans, the banks that serve Main Street must have the same chance to succeed as the banks that serve Wall Street. But the post-crisis regulatory framework has instead become a threat to the community bank model. Since 2010, we've lost 3,600 community banks, a reduction of over 45%. Community bank share of bank assets have fallen from 23% to 15%. Their share of outstanding bank loans has fallen from 27% to 20%. Their share of outstanding bank CRE loans has fallen from 52% to 41%. This represents an acceleration of trends that predate the 2008 financial crisis. And in a disturbing new development, de novo chartering has dropped precipitously,
Wasn't there a movie that
averaging
was
just
like that?
6 new banks per year since 2010. For comparison, in the years prior to 2008, there were 100+ new banks chartered each year. The post-crisis framework has left a trail of destruction in its wake by reinforcing the larger economic dynamics that have hollowed out the American heartland while enriching the money centers in coastal cities. To be clear, the financial crisis underscored the need for new regulations. The purpose of Dodd-Frank was to end too big to fail, but it ended up creating too small to succeed. These new regulations entrench the dominance of the largest banks by rewarding economies of scale and necessitating effective lobbying operations here in Washington. What followed was a community bank bottleneck that left America's hometowns reeling. President Trump and this administration have seen what the heavy hand of government has done to community banks and the families you all serve, and he has set out to fix it. Why? Because we know that the Main Street revival starts with a community bank comeback. How will we position community banks to succeed? Let's start with the early wins. Just days after President Trump was sworn into office, the administration began rolling back the regulatory excesses. They proposed to rescind an embarrassing, complicated 60,000-word Community Reinvestment Act rule, and they retracted a merger policy statement that was both bad policy and bad law. The previous administration pushed for rules and guidance that micromanaged corporate governance, entangled the bank regulators in climate risk management, unduly restricted brokered deposits, precluded responsible bank innovation in crypto and other blockchain technologies, and imposed arbitrary restrictions on incentive compensation. These Biden-era proposals were bad for banks, bad for business, and bad for America, especially Main Street. So President Trump slashed all of them. To restore the strength of community banks, the new administration has replaced this draconian agenda with a new, more constructive agenda. The FDIC, for example, has recommitted to tailoring by proposing to raise and index asset thresholds. It has streamlined examination procedures and branch applications. It has started work to reestablish a supervisory appeals body. Not to be outdone, the OCC has implemented its own reforms. Controller Gould has been on the job for only 12 weeks, but he's already reduced assessments on small banks by 30%, reversed the plan to merge community bank supervision into large bank supervision, and replaced community banks' formulaic examination schedules with a more risk-based approach.
Like for those that don't know,
Vice Chair Bowman,
I'm not expecting much
has
to
long
happen now.
advocated for
I just want to
revisiting
see what Jerome Powell says in like the first 3-4 sentences, if that's going to actually cause something. But most likely just wait until after this is finished, then we'll look for opportunities. Most likely throughout like New York session, I think we're going to hear talks about the ending of the the war that's going on, what's going to happen next, is it going to be signed? What I would focus on though is everything opposite, right? So if they're saying that, oh, they're going to release hostages in 24 hours, if they don't, right, if we see escalations, that will be a crazy opportunity. That would be the best opportunity. The ending, like I say it all the time, the ending of this war, I don't think the markets is going to care as much, right? Like not from a market perspective. Is it good from like a political standpoint? Yes, of course. But from a market move perspective, ending the war, I don't think it's going to matter as much. Markets like surprises, right? Markets like uncertainty. That's where you get a lot of volume coming in. So if we get that, equity sales, gold upside, okay? But if we do see more comments about more peace talks actually happening, do I expect a risk on market? Maybe from the initial signing of the document, like once it turns to a fact, maybe that could be a market mover, but then back reversals is going to happen. Okay. So just to throw that out there, like this right now, it's just best to let the dust settle. Like when it comes to the AI, it's interesting because I think in certain platforms where you just talk to the camera and you say certain phrases and then all you do is just like put your whole speech there and it just does stuff like this for you. I think it's actually them though, but I really do believe that's going to be the future. We're going to have to watch out for shit. I know there was a movie that did that, where they clone people's voices, and if it clones like the politicians. I forgot the movie it was. I think it was on. I forgot what movie it was, but I know they clone politicians and making them say certain things. Like it's gonna be crazy. But yeah, like the Jerome Powell thing was pretty wild.
3 bank failures. Once finalized, a clear focus on material financial risk will put an end to this nonsense. I'm also optimistic about AML CFT reform. In my meetings with community bankers, they list CTR filings, structuring SARs, and process-focused examinations among their top concerns. Today, FinCEN released FAQs to address pain points on some of these issues, including triggers for restructuring SARs, continuing activity reviews, and the absence of any requirement to document a decision not to file a SAR. These are common sense, yet consequential reforms that will ease regulatory burdens without undermining law enforcement efforts. As part of our broader campaign to modernize illicit finance regulation, FinCEN and the bank regulators are hard at work on a new rule to define the requirements for an effective AML CFT program. My expectation is that a proposal will recenter supervision where it should be, on the effectiveness of a bank's AML CFT program. I likewise expect that proposal will position FinCEN as a gatekeeper for AML CFT enforcement. This will be a significant departure from the past with its zero-tolerance focus on process, documentation, and wide latitude for supervisory expectations and judgments that are not always consistent with the law or our national security priorities. A focus on higher value activities will also better serve our law enforcement and national security objectives. These are all important victories, to be sure, but much work remains to be done. Where do we go from here? Going forward, Treasury will continue to drive reforms to improve regulatory tailoring, refocus the culture of supervision, and modernize our illicit finance regulation. Specific priorities will include reforms to the rating system, new processes for monitoring examiners' compliance with supervisory policy, mechanism for independent appeals of supervisory criticisms, coordination to avoid duplicative examinations by different regulators, and review of the core platform providers, including contract terms that prevent community banks from innovating for the future. For community banks to go back in the offensive, we need to take a closer look at the dynamics that have undermined the community bank model and work to fix them. To that end, as I have said before, Treasury is focused on ensuring that modernization of our capital framework ends the capital arbitrage that drives bank lending to non-banks. This will likely entail reduced capital requirements for large banks on mortgage loans, investment-grade corporate loans, and some other important exposures. We must therefore ensure parity by giving smaller banks at least the option to benefit from these reduced requirements. Treasury has also supported congressional efforts to modernize the deposit insurance framework. I'm encouraged to see emerging bipartisan support for increasing FDIC insurance limits on non-interest-bearing transaction accounts. In addition to these efforts, Treasury has taken an informed and careful approach to Fannie Mae and Freddie Mac. Any actions on the GSEs must not increase borrowing costs and must preserve what works in the current system. That includes the prohibition on volume-based discounts for large lenders, as well as the cash window and other features that preserve equal secondary market access for small lenders. Now, allow me to close with a call for action. Before President Trump took office, community banks spent decades on the defense. But under President Trump's leadership, the game has changed. The playing field will be even more even. The ball is in your hands again. What happens next is up to you. So my advice, go on the offense, retake market share, chase after customers, champion technology, leverage the new regulatory landscape to your advantage, and expand your role in the American economy. The community bank comeback will help pave the way for America's golden age. Recognize the outsized role you play in this effort and embrace it. Because if you lead the way, Main Street will follow. Thank you.
Yeah, we all know it's a monopoly. Like, it's bullshit. It's just all monopoly. Big banks are taking over.
Thank you, Secretary Besant. It's wonderful to hear a Treasury Secretary. I'm not sure I've ever heard a Treasury Secretary talk about community banking and the importance of community banks in the United States and for the U.S. economy in my lifetime. So it's really refreshing to hear you engaging on things that are so important to areas like where I'm from and rural communities across this country, and how important community banking is for the foundation of our economy and the economic system. So if you don't mind, we'll start with a question, and thank you for joining me for a fireside chat this morning. But as Treasury Secretary, you oversee U.S. fiscal and macroeconomic policy. So I know every banker in this room is interested to see how you think about how the economy is going to develop over the next 12 to 24 months, and what key risks and opportunities should they be thinking about and looking out for as they're thinking about how to shape their businesses going forward.
Well, I come with some good news this morning, and Treasury, because of the Schumer shutdown, will not be able to release the exact numbers, but the CBO jumped the gun a bit, and it was on Bloomberg this morning that the deficit for this fiscal year, ending September 30th, will be slightly lower. When I went to see President Trump 2 weeks, and more importantly, the deficit to GDP now has a 5 in front of it. So according to the CBO numbers, and we don't have the Treasury numbers yet, the deficit to GDP will have fallen from about 6.5%, which was the highest when we weren't at war or weren't in a recession in U.S. history, to 5.9%. When I went to see President Trump approximately 2 years ago to tell him that I'd like to come out from behind my desk and get involved with the campaign, not going to repeat many private conversations, but this was particularly notable. He looked at me, first thing he said, Scott, how are we going to get the debt and deficits down and not cause a recession? And we're on our way. I think we saw that today. So I think the president's economic policy, as many of you would have seen me say before, is a three-legged stool: trade, tax, and deregulation. The one big, beautiful bill.
Of course, he's going to be optimistic.
Has
like,
incentives
you can't say
for
shit is
both
fucking up, but that's why we
America,
need the data.
in terms of full expensing for plant, property, and equipment, And the plant part is new. In the
Yeah,
Tax
just look
Cuts
at
and
gold.
Job
As soon
Act
as he says,
2017, there was
everything
full
is going
expensing
well, gold
for
rises.
equipment, but we have
Like,
added
come on.
structures for both industrial structures and, importantly, agricultural structures. So, secondly, on the other side of the ledger, it also includes the president's tax policies or campaign promises for working Americans: no tax on tips, no tax on overtime, low tax on Social Security, and interest deductibility if you buy an American car. I think one of the things that we are seeing now, most taxpayers have not changed their withholding stance to reflect this. So we expect to see substantial tax refunds beginning of next year, which I think will be accrue to lower end consumers for the bottom 50% who need the relief. And concurrently, they will change their withholding schedule so their real take-home pay will be higher next year. On the trade deals, I think one of the underreported aspects of the trade deals is not only are we taking in substantial tariff revenue for our American exporters, we have brought down non-tariff trade barriers and brought down tariffs across the board. So with many of the deals that we have gone from high tariff levels, and I tell you, for instance, Indonesia was very good about bringing down their tariff levels, but when they showed you the list of 9,000 tariffs that they had, you couldn't believe it. So, and like President Trump said, I don't blame the Indonesians for doing it. You blame the folks who were sitting at the Resolute desk for letting it happen. So on trade, we're landing the trade deals. That will increase certainty.
Just imagine.
And then
like,
finally, on deregulation, we talked a lot about financial
the trade deal
deregulation,
percentages.
but
Just imagine
we're
those
also
numbers.
talking about energy and industrial deregulation. We're trying
oh
to make it easy to build things here again in America, whether it's permitting for factories, for pipelines, for the electric grid. So I think I'm very optimistic that 2026 could be a very good year across the corporate and the consumer economy.
Well, thank you for that. You've been very busy since you
just a visual
got
to
started
see how
earlier this
prices
year.
are
So
going.
thank
That's
you for
just-
sharing
that's the
that, and
whole
I think
purpose
that's a
for
very optimistic view about how the economy will be evolving. I think in the relatively near future. Thinking about that, community banks are critical in providing local and regional credit throughout their communities, through small towns, through rural areas, and in underserved markets especially. So you talked a little bit about what some of the initiatives are that Treasury's been working on with the prudential regulators. Are there other areas that you'd like to focus on or to share with us today that might be helpful for bankers to know?
Well, as you said earlier, I may
Give
be
it another 5
one
minutes,
of the few,
and then that's it.
not the only
Like,
Treasury
it's not-
Secretary
nothing
who's
right
given
now
this
is
much
going to be like
emphasis to community
market
banks.
moving.
Probably
I would
the
say wait
only
until
Treasury
after
Secretary,
9:30, probably
since the
10
17 or
o'clock.
1800s
Let's see if
who
we can
was-
get
well, wouldn't have
headlines
been
on
farm radio,
most likely
but
the
is also a
war
farmer.
ending
So,
headlines will probably
I remember
come
listening
back
to
up,
farm
but it's
radio,
best to let this finish.
right after
So
the
at least the
Silicon
markets don't
Valley
have to really
debacle
focus on
and- or
any of
the
this
three-bank
comments, even though it's
debacle.
not on monetary
And,
policy. Like
they
if
were
he's talking
talking
about
about the risk
GDP
to
and he's
community
talking about
banks
growth and labor,
that were
that
happening,
can impact the markets too.
that could be
right? So
happening
you just don't want to
here.
be shocked or
And,
surprised by something.
I was just struck by what the presenter was saying. He said, the big banks, they're going to come in, they're going to buy up our banks. They don't play Little League Baseball with your son. They don't play softball with your daughter. They don't go to your place of worship. They don't know you from the Rotary Club. What are we going to do? And so we are committed, as I said. I'd like to see us getting back to de novo banks. Again, it's a sign that when you see creation of something, it's a sign that the ecosystem's healthy. So we want to get back to de novo. We want to get back to leveling the playing field. I think these transaction accounts are very important. We try at Treasury.
I mean, don't y'all think that making it an even playing field would be better, right? Because if money rules the world, right, and where is all the money stored? In banks. So if you're a politician, like right now, Bassnet, what bank card do you think he has? Right. I'm pretty sure he don't have a small community bank, right? He probably got one of the big ones. So when we understand it from that standpoint, like who actually is controlling everything here, right? Because if you need to swipe your card to get food, and these politicians need to eat, who controls the value of currency, right? So that's why I feel like some of these meetings is just full of hot air. It does, like, it's just meant to have it, but there's nothing that's going to change. But in a perfect world, it'll be great to have an even playing field. You know what I'm saying? But it's like, what could outdo JP Morgan, Chase? What could outdo Bank of America? Like, you guys know all the big banks. You probably don't know any of the small banks that is in your neighborhood. You know what I'm saying? So it's a good conversation to have, but it's nothing is, I think it's too hard to kill. You know what I mean? And plus, there's always a rotation. Like, you always see, like, people they all go to the same schools, Harvard, Yale. They work at Goldman Sachs. They're going to work at JP Morgan. Then they're going to work for the government. Then they will go work for the IMF. So it's always a rotation. There's always a circle. You get what I'm saying?
Function. Let's make capital more risk-based. Let's understand that there's a lot of work to do in terms of bringing this back down to common sense levels, in terms of knowing your client, in terms of releasing what I would say is this regulatory straitjacket. And famous last words, I think private credit is a dynamic new aspect that increases the depth and breadth of the U.S. financial system, but it can't be to the detriment of the regulated system. Because my real worry with private credit is everyone in this room, all the bankers, and look, I met a lot of banks who've been going since the 1800s. And if you've been going since the 1800s, you know a lot about risk management. You know how capital works. You know how your clients are.
See, risk management, how capital works, and human behavior.
My worry with private credit is it could be very pro-cyclical, that without stable deposits, in terms of if there were a downturn, the way Treasury and Federal Reserve would work together would be with window guidance, would be with regulatory lessening.
Yeah, so far nothing is happening with the market. Still ranging markets,
parameters,
stock
and to
markets
restart the economy in a counter-cyclical basis. So we also want to look at that. And again, too, a lot of the things we want to do, we want to make it easier to operate. We had a small community bank from South Carolina a couple of weeks ago in one of our panels. I think it was 185 million of assets, 17 employees. I think 5 were for compliance. So, and no one is more focused right now on financial crimes. Our FinCEN department is 24/7 in terms of what we are trying to work on.
It seems like
but
gold
we're
is probably
also
hit another high
trying
today
to
too,
add
especially
a
if
common
commodities
sense
keep
layer.
rising like that.
Can
It's
we
not
do
doing the
geographic
opposite of the dollar
targeting?
and the yields too. It's definitely driven uncertainty.
That a huge amount
very
of the
interesting to see the
narco finance is
reactions,
along the
especially
border.
like
Should we
from
lower
today?
SARs
But
there
definitely, yeah, good
and
job
raise
for you
them
guys at
everywhere
Core
else to avoid all this regulatory expense?
Well, I think that's a very important topic for many community bankers as they think about some of the regulatory burden and requirements that they're not sure what happens to once they send it forward. One thing I want to just pull a thread on is you mentioned the importance of ensuring that we have the ability as regulators and bankers are not disincentivized from participating in different types of activities. One thing I would point to, and I have many times over the years, is to talk about how important it is that we're pulling some of these activities back into the regulated financial system, especially real estate lending and mortgage servicing and things of that nature. So I know many of these bankers in the room are hopeful that we'll be able to think about that differently. So when you discuss the regulatory perimeter, I think that's a very positive,
All right, guys,
positive
I'll leave it at that.
path for discussion.
Yeah, obviously we know nothing major is going to come from this, like nothing market moving. All right, so it's best to wait until. It's best to wait until like after 9:30. NYSE open. Let's see if we get some volume. There's no risk on, risk off market at the as of right now. We're just seeing consolidation. So nothing is driving because we don't have economic data because of the shutdown. Most likely, if I had to pick, I would rather see a risk on market because of what's going on with the ending of the war. It's a possibility for that, but let's see if we could get something new today regarding headlines. All right, guys. So in a private group, just make sure that you have the Newsbot feed. You just have that notifications are on. I would definitely let you guys know as well if anything new happens. But focusing on a news headline or just I'm gonna go live here too, so you could watch the Reuters as well. So we could pay attention to news headline. I think that's how the markets is going to be more heavy regarding that. Okay, so I would say that this is probably going to be the focus. But as of right now, like the meeting, a lot of hype about it, but nothing is going to be market moving from that meeting. All right, guys. So just be cautious. Remember, just try to use risk management for today. Take only like 1 to 2 trades. If you're taking a technical trade, if you're done already, if you did your opportunities over Asian session, don't play with today. Just enjoy your profits. Okay. Let all of this pass until we get something new. All right, guys.